I chose Bitcoin and Ethereum, and I switched. I started with Bitcoin, I then added Ethereum, I then switched. Then I just did an equally weighted basket of a bunch of all the other protocols, DeFi, other stuff. So whatever ends up appreciating the most at any one point will have the highest weighting. But I've not made a macro bet on a single other one. Then I've started taking macro bets on social tokens. But these are smaller, less liquid things. So you can't take a huge value of your portfolio because it's very early. So as a risk thing, I'm like, yes, I want some social tokens and I want a bit of the metaverse too. So you're getting the scoop in Global Macro Investor, my kind of institutional research product. This setup is absolutely brilliant. So the chart pattern was this lovely wedge in Ethereum. The Ethereum chart is following the Bitcoin 2017 chart, which would give it an upside projection of 20,000. Backed that up by the network growth, where Ethereum is growing at about 50 to 60% a year in network growth, and Bitcoin's growing at 30% a year. So this is astonishing growth at scale, right? So this is not an early project. Interesting enough, how I did this was I chose Bitcoin and Ethereum, and I switched. I started with Bitcoin, I then added Ethereum, I then switched. Then I just did an equally weighted basket of a bunch of all the other protocols, DeFi, other stuff. So whatever ends up appreciating the most at any one point will have the highest weighting. But I've not made a macro bet on a single other one. Then I've started taking macro bets on social tokens. But these are smaller, less liquid things. So you can't take a huge value of your portfolio because it's very early. So as a risk thing, I'm like, yes, I want some social tokens and I want a bit of the metaverse too. So that's how I've constructed it. So I don't have any difference in weighting in my head between Cardano, Polkadot, Aave, any of this stuff. And they're all different things, different use cases. But I said, look, I don't know, I'm not smart enough and it's not my job. I mean, I don't do it with the S&P 500. I'll just buy the market if I'm trying to express the market here. So all I see is this giant sucking sound of talent into the Ethereum space right now. That means that it is growing faster. And it's playing out in the price of Ethereum versus Bitcoin. So it's kind of double, it's up. So Ethereum's currently up, if I look down my Bloomberg screen here, Ethereum's up 450% this year, Bitcoin's up 75%. We've got all of the developments with NFTs and DeFi and everything and social tokens, everything's on Ethereum. The chance of Bitcoin versus Ethereum also is going to give a lot of people to switch. And then you look at the on-chain analysis. Most people spend the time, like Willy Woo, looking at the stuff on Bitcoin, but very few people actually bother with the on-chain analysis of Ethereum. The reality is the amount that's being staked for ETH 2.0 is going up all the time. It's huge numbers. Then the amount that's being put into DeFi and locked away is huge. Then the stuff that's going off the exchanges into hard wallets is enormous. That has left us with a free float of 13%. And 1559 is now going to reduce the supply somewhat, let's say from 4% to 2%. And it's going to probably lower the gas fees a bit. And with the variable block sizes, help with the speed unblocking of the network. So my current allocation, because I know everybody asks, I'm now currently about 25% Bitcoin, 55% Ethereum, and 20% other tokens. Why is Ethereum my bigger bet right now at this point in the cycle? It's because it is seeing different network effects. So it's got the network effect of investors, those people piling in. There's the network effect of developers working on the space, which dwarfs any of the other spaces in crypto. And then there's the network effect of the applications being built on, like DeFi and NFTs. So you've got this holy trinity of things happening. And then on top of it, you've got this change to ETH 2.0, which basically massively reduces the supply because they're burning ETH. So what happens is it becomes a scarcer asset. So then you've got a super scarce asset that is in massive demand from investors, from applications, and from developers. The other problem with ETH has been the high fees, and that remains the thing, the gas fees. But within the part of the transition to ETH 2.0 is this move to proof of stake and how this may lower the gas fees significantly and free up the network. And people are then building layer 2 solutions across it to make sure that we can get round this. So in which case more transactions will go through, which will mean more burning. So you've got a massively reduced halving of the supply rate, probably, maybe more. You've got 13% of coins on exchange coming off exchange like at 1% a month, 2% a month. So, another couple of months will be 10%. There's no coins. And like NFTs are just showing you demand is exploding. You're set up for an exponential move here because everything has come together all at one point in time. Now, does it mean that all happens in one go? No, don't be silly. We'll have corrections. There'll be like, the rumors tell the facts. See, I told you it was wrong. All of that kind of noise. But generally, you look back by December or March of next year, everybody who's got a sizable stake will realize that the price is going up. More people will lock into 2.0 to get the yield. Let's say 2.0 comes out in March. You're going to take all the supply off the market and with record demand, and they're all going to be locked until March. Then probably what happens is 2.0 comes out, everybody unlocks, and the great bullish thing is actually a bearish thing. Exactly like Coinbase was when the moment Coinbase came out, Bitcoin peaked because people had another opportunity. Everyone's like, this is great for the space. In the end, you change the dynamic. So I think the unlock will probably lower the price. But between now and that unlock, oh my God, this is one of the best setups I've ever seen. I think arguably better than Bitcoin in March of 2020. So that's one thing that I really observe. And the other thing I'm really passionate about in getting people to understand how to take risk. Because buying a small, unknown, newly issued token is not the same as buying Bitcoin. And the Bitcoin people will say, they're all scams. No, they're not. These are VC projects, some of which will be scams, as every company and every walk of life. But these are new projects, and we don't know if they're going to succeed. And that's okay. It's like real-time mark-to-market VC. And anybody who's built a business knows that your business is worth zero half the time. Half the time you think you're going to get rich, and half the time you think, oh, I'm going broke. And until it finally gets traction. That's normal. So you need to allocate according to the risk you're taking. Now, you may be the really, really smart person who really knows their space and really knows the network effects and the possibilities, and you'll take a larger bet. And that's okay. But, it's teaching people how to use risk management, because so many people into this space are new to investing. And that's cool. But just to understand some basics about where to be happy to lose money and where to be happy not to lose money. And I'm not even talking about trading. I'm just like, you won't lose as much money in Bitcoin as you will lose if you get it wrong in a small token. So you don't put the same amount of money in each. And, I think that lesson for people is a huge lesson to learn. The Ethereum chart is following the Bitcoin 2017 chart. And it's playing out in the price of Ethereum versus Bitcoin. Is the amount that's being staked for ETH 2.0 is going up all the time. I'm really passionate about in getting people to understand how to take risk.